FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is January 25th, 2017, a momentous day in financial history. The Dow has just broken 20,000. We'll see if it closes there. And, of madness and the madness of crowds, we've got Danielle Park with us. Danielle, happy Dow 20,000.
Hey, happy to you. Let's go to 30,000 next week.
Hey, well, this is Trumphoria, and I just happen to own that URL if anyone's interested in buying or renting it, Trumphoria.com. But, I don't think it mattered. We've talked about it before. If Hillary Clinton was president, I think this was baked into the cake. It was programmed, and it just required a little flipping for Wall Street to just make it Trump 20,000 instead of Hillary 20,000.
Yeah, well, I think the number one thing that matters most of all, and I don't know if Mr. Trump appreciates this, frankly, because he's very fond of talking about the incredible IQs of his cabinet and things, but the reality of it is that any politician coming in inherits the economy as it is. It's not made something because of them. It's whatever is already taken place in the years prior to them taking office is what defines where they are in the economic cycle and the market cycle. And it takes a good deal of humility probably to appreciate that the cycle is actually in charge, not any individual ego or IQ. And so whoever would have come into office right now would be doing so. I mean, let's look at the facts. They'd be doing so at 8 years since the last economic recession, with stock market and real estate markets back near all-time cycle highs, with debt levels in the world at cycle highs, with unemployment already back at cycle lows around 4.9, which is historically your full employment in the American economy. Auto sales have already been at peak levels. Profit margins have been at peak levels. So this is the mere opposite of when Obama took office in the midst of the crisis, in the midst of the Great Recession, stocks, down by half. Everything had plummeted. So really that set up Obama's first term to surprise to the upside because, everything had already been halved and he was coming in very pessimistic, very low expectations. Well, we've now got the exact opposite condition for Mr. Trump to take office, which is, as I say, all these historic highs in certain indicators, meanwhile, 32-year lows in interest rates. You've really got him set up for a very unfavorable mean reversion cycle in his first term, really no matter what he does. And the irony is that even if they get some of the policies through which they're promising, that is not something that will be immediately stimulative or immediately address any of those factors. Like it's not going to reduce debt in any meaningful way. Indeed, it's going to increase debt. So he can't fabricate conditions. He can only deal with what he's got. And so, unfortunately, mean reversion is not set up in Mr. Trump's favor right now.
Yeah, and really, when we look back, every time there's been a president in office for 2 terms, the odds of the recession occurring for the next president is like it's baked in the cake. I mean, it happens. And
then that goes back to the presidential cycle. And people talk about the presidential cycle. Again, doesn't matter who's the president. The point is that you get these periods of exuberance that go to a peak, usually huge leverage, overconfidence, which is, I think, where we are today. Then you get the reality setting in, the mean reversion of the economic cycle, brought down by demographics in this case and the weight of debt. And then you have to disappoint for a while until you make a trough. And I guess what I try and tell people is that when you're looking at these things from an investment perspective or where you should put some savings to try and make returns, you have to be careful that you take into account the entire economic cycle, the entire market cycle, not just plop down your chips and expect, indefinite expansion and upcycle. That's just totally totally irrational and very devastating ultimately, because if you have no discipline about when you're putting money into these cycles, you have no discipline about when you're taking it out either. And you're just going to ride from trough to trough and be further and further behind. So it takes a good deal of emotional intelligence, as Danielle Kahneman would call it, awareness, behavioral science, all that stuff. And so I think, the art of the cycle, I call it. Mr. Trump likes to call it the art of the deal with his promotional book and all that. But this is the art of the cycle. This is knowing that you have to be aware, because unless you're a trader where you're just sort of throwing money in, and we know historically or statistically that traders ultimately go bust very often, the major proportion of them do, or unless they're doing some insider trading or using HFT, some illegal or unfair advantage they're taking, you can get away with that for a while. But if you're actually trying to pick stocks and trade them, you have to have a very tight discipline about when you put in money and when you're taking it out. If you're doing it on any kind of ad hoc, gut-based, confidence-based, whatever, those are the kind of people that go bust. And so if you don't want to be doing the kind of illegal acts or the wild gambling, which most people don't, if they're intelligent at all with their savings, they say, gee, I don't want to be, doing either of those things with much of my savings, then you really have to go back to what will give you the highest probability of success over time. And that is, as boring and slow moving as that sounds, that is developing a discipline or rule set around valuations about when you will and won't buy and sell things. You have to define that in advance. And the other thing is to pay attention to these cycles. We talk about cycle, presidential business cycle style, which is every 4 to 6 years kind of thing it plays out. And then we've got secular, which is, more than one business cycle. So trends that prevail over 3 and 4 of those business cycles is a secular period. And those are things like the debt cycle typically goes, down or up for multiple cycles. And that's called a secular period. So we've been in the falling rate environment for more than 30 years, where debt has been compounding, adding on some, 69 trillion of global debt at the moment, of global debt that has been added on. So, you have to be aware of that and know that these trees don't go to the sky, and that you have to be looking for pullback periods. And unfortunately, most people, their confidence grows as price goes up. They add on leverage instead of taking it down as price goes up. So they just keep adding on risk at a time when they should be taking it off. And that's why they implode.
Yeah, they zig when they should zag, and they zag when they should zig. And that's what happens. So it's baked in the cake for Trump. But the concept of cutting taxes substantially, and also of relieving this regulatory burden that's really been put in place over the past 60, 70 years, since FDR, 80 years really. It's just been magnified, and over-regulation. We're not talking about regulations, necessary regulations, a lot of them. We're talking about those EU-type regulations where, regulating bottled water with 20 pages of regulations. I mean, the kind of regulations that bureaucrats put in place to justify their existence.
The other thing I think they do is complexity breeds this cover over what is actually going on. And I think that's a secular trend too. I think we've seen for the last at least 30 years, this trend towards corporations taking over the reins of politicians, of the process, of buying their way into influence in all the regulatory agencies. So although it's looked like busy and like lots of stuff, it's been a cover for this coup d'etat that's taken place, where they really,
regulatory capture.
Yeah, absolutely. And so what I like about the Trump, taking Exxon's head and putting them in charge of the Department of Energy, like really there's a stark reality about what he's doing in this cabinet, which appalls and upsets people. And I think to myself, good, maybe we've run to the end of this tolerance and apathy for this corporations taking over the government, because now it's obvious that that's what's happened. We can't pretend that that's not what happened. That's not what's happening. That's obviously what's happening. So there's no nicety or varnish or cloak in what's going on here. And I think that's probably a good thing, because at least it will take away this ability for subterfuge, for pretending that that's not actually been going on already. I mean, whoever would have come into power at this point, whether it had been Clinton or whether it's Trump, that's the reality of where we are today. So it's a question of, again, mean reversion. Are we, where do we go from here? Like, if we continue in this vein, then corporations own everything and the rest of us have no rights and no ability to, fight for any kind of social justice. And, so I think we go back the other way a bit, which is to have this division of power again, to have the separation, so that, you can't have, and this goes back to, for example, one of the things that were frozen this week by the Trump freeze on regulation was this move towards fiduciary standard in the financial business. So there's a prime example of an area where I know intimately well, where we didn't need 2,000 pages of Dodd-Frank. What we needed was a division between the sales and the advising function. Now, this freeze has made a lot of financial types rejoice, because they think, awesome, now we're not going to have to put the best interests of clients first, and we're going to be able to go back to just, lining our own profit and pockets at the expense of the customer. Awesome. That's what we always been doing anyway. So, they're breathing a sigh of relief, but
premature.
I think, then there was talk about whether Mnuchin and the government were going to consider a new Glass-Steagall. So I would be happy to give up, the 2,000 pages or a good deal of the complexity in the financial regs if we could have a hard right return between the selling side and the advising side. That's critical. And that simple example applies not just to the financial industry, that applies to everything.
Absolutely.
If you're going to have the commission-based, profit-focused folks giving the advice, the whole system falls apart. So divide the two, keep the profit-seeking people off the government purse, let them stand on their own merit and strength. If they're geniuses, so be it. Let them manage without government support. And then let's just go our own way. Let business be business and let government be government, separate from, what needs to be done to protect some of the basic public interests.
I totally agree. And let's get government insurance out of this mix.
Yep, that's what makes
too many government insured entities here, which can just lead to this chain reaction collapse that we almost experienced in 2008.
Yeah. And also there's a saying the Irish have, a big man, but a wee coat fits him. And to me, that is perfect for the corporate class who believe that they are all knowing, all seeing, all powerful, self-made and all that, when ultimately they are the benefactors of enormous largesse from the public purse.
Oh, God, yeah.
They have bent the rules, taken advantage, and they think they got there all on their own merit and bootstrapping and all that. And it's an embarrassment. So again, mean reversion wise, I think because the financial system was bailed out, because share prices have gone up again over the past few years to obscene valuations, nonsensical on an investment perspective, but speculators have been heavily rewarded in this environment. And so until we have a big calamity again hit that class and really sober up and evaporate, trillions of wealth off the balance sheets of these people and corporations again, I don't think you're going to get any revelation about how dumb and reckless they've been. But, whether they get any self-awareness out of it, who knows? But I think that the public perception will heavily change once asset values mean revert once more.
Yeah, well, some of these guys might be who Trump has pulled on. It's a question of, have they become self-aware and that's why they're on there? They're outsiders, insiders who've become outsiders. This remains to be seen.
I'd love that to be the case. Wouldn't that be nice?
I'm questioning. I don't know. We don't know yet. He's been in there for 3 days.
Well, there's there's an idea that, you want billionaires because they don't need money anymore. And so, they can't be bought. They can't be queered by a buck because they've got enough. if
Well, I don't believe that necessarily.
that would be lovely if that was true, but unfortunately, I don't know. I've learned to be more skeptical.
We don't know yet. I mean, on the one hand, they could be more corrupt than even the most corrupt people in the Obama administration. On the other hand, they could be so fed up with the corruption that they want to just purge the system. I'm skeptical, okay, but there is the possibility. We don't know yet. I mean, Probably not, but there is a possibility that some of them, or it could be a question of keep your friends close and your enemies closer, I'll make a
forecast here, Kerry.
Yeah.
I'm not big on forecasting because I have a certain amount of humility, and I know how confidence begats spectacular failure if it's overconfidence about your ability to forecast the future. But here's something I'm pretty confident about, that the economic fallout from these record valuations and peak expansion and the recession that's well overdue now will come, and Mr. Trump will not take credit for it. So whatever goes wrong, he's been tweeting about Dow 20,000 and awesome and all that, and I'm thinking, listen, you were talking about a stock bubble before you caught the reins, and now you're celebrating Dow 20,000. So I know he's trying to suggest that the stock market's up because of him, but I can guarantee you he will not be taking credit when the bear market comes.
Well, I love to take credit for my kids' accomplishments too, but I sure as hell don't like to take credit for any of their failures, right? True? As a parent?
That's it. So,
I love it when they do well, but when they screw up, hey, that was, and that's the old saying, success has 1,000 fathers, but failure is an orphan. Right?
Absolutely.
So
yeah, absolutely. And I think there's
I'll
no
join
question,
you there.
As Mr. Obama goes out, I'm seeing a lot of, emotional materials, articles, videos, people, saying, oh, we'll miss them. They're such decent, good people. And that may indeed be true. But there's also no question that the 8 years of the Obama administration and the creep of corporatocracy and the pretending that wasn't the case is largely to do with how Trump was elected. So there is again, you can't ever blame one person for one thing, or it's a trend that has been building for many years, and there's much complicity on all sides in this progression. But certainly the Obama administration brought us to the point where Trump has been brought in, and things will get worse. I am quite sure of it in many ways, and they may also get better because of this, as I say, sort of a breaking point, a part of some of these pretension that was going on.
Yeah, well, what really disturbed me, and it's not just a trend in the U.S., it's worldwide, the breakdown of the rule of law that took place during Obama. And we saw it right the first week of his administration. And it was happening during Bush, too, don't get me wrong. It's not a party phenomena. But we saw it with the takedown of the secured creditors of GM and Chrysler, and the elevation of the unions, and that whole prepackaged bankruptcy of Chrysler and GM, and the secured creditors, whether they were hedge funds or whatever, irrelevant, reversing 200 years of established creditor rights. The first week of his administration, and that set the tone for so many other extra judicial and constitutional actions of the administration. We saw it with the NSA, everything else. And I don't think it's going to be any better with Trump. Don't attribute that. But it would be nice if that did happen. And it would be a welcome change from a trend that's goes back many decades.
Well, ultimately, your executive order that, Mr. Obama wielded and Trump's been making big splashes with the first few days. The reality of that, of course, as you well know, is that your Supreme Court has ultimate adjudication of whether that's in line with the Constitution. And the executive orders are meant to direct governments to act on the legislation on the books, not to, decide that one person can make the law as he sees fit. That is to direct your Congress to do as they are required by law. The problem is this great impasse that's developed in democracy everywhere, frankly, but America as well, where, again, the constituent members are so purchased by their own special interests that they're non-functioning as a government. And so nothing that's substantively required seems to get passed.
Well,
and so you're reduced to an executive order system, which ultimately can be overturned by the Supreme Court, who's the keeper of the Constitution.
Well, that isn't why Obama did his things. I mean, he wanted to do things. The Congress wouldn't go along with it. So he just, they get Obamacare through that has all of these flaws. And to keep it going, to correct the flaws, he just does executive orders to correct the flaws. And these fixes really required congressional action. But because he lost control of Congress, his party, he just orders these executive orders through. Now, what Trump has done so far, he hasn't done any executive orders that really border on making laws. What he's done so far really is just enforce laws that are on the books.
And freeze things, the impasse so that nothing actually gets implemented.
He has the right to everything he's done so far. Totally within scope of the laws. He hasn't effectively issued an executive order that is effectively making a new law. Okay,
well, that's just saying what Obama's done. The same problem is plaguing and will plague because of the necessity to get things through Congress.
I'm not saying that he's not going to do it, but thus far, everything he's done is nothing. He's undoing stuff that Obama did through his executive orders. All right. But he hasn't issued an order that would be construed as passing a law without congressional approval. OK, so I'm not saying that he's not going to do it. It wouldn't surprise me if he did. And that should be struck down for certain, just as it should have been.
This is back to your comment about the rule of law having to be prevalent no matter who's in the seat.
Absolutely.
We need that to be, we need a mean reversion back to the rule of law from the period of anarchy that we've had. And, ultimately these periods end typically insurrection or financial collapse. So we'll see which one we get. But, I just want people, I guess, to be realistic and aware that because they talk with such confidence about how much a leader is going to do in changing or making something more in their favor. And the reality is that's not the system we have. We have a system that is supposed to be about, democratic interests and negotiation and finding common ground. And in fact, we have, really devolved into a system where there's behind the door secret deals and bought off and the public interest is not being served.
The public be damned, if I think it was John D. Rockefeller once said. And that's the system that we have now. And we got to go. So check out Danielle's site, jugglingdynamite.com. I always do. And financialsurvivalnetwork.com. Sign up for our newsletters. Any questions, comments on this segment or others, KL@KerryLutz.com. It's KL@KerryLutz.com. We will talk to you in a couple weeks, Danielle. Be well.
Thanks, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.